Spain's government formally asked for billions in aid from the European Union to bail out its banks this morning. Arch rivals Sony and Panasonic agreed to form an alliance to develop next-generation flat-panel TVs. I'm Lindsay Bell, and the Morning Call starts right now.
Good morning, I'm Scott Rudler, Chief Strategic Officer of T3Live.com.
And I'm Lindsay Bell with The Street, and together we bring you the Morning Call Express. This morning, futures are pointing to a down open. Spain officially asked for some funds from the EU. Italian banks are following in Spain's footsteps too. There's some troubles there. And this is all ahead of the EU summit later this week.
Yeah, we're starting to get more complicated and new headlines. We haven't had the Italian bank headlines. There's been rumblings that they might need a bailout also, but over the weekend you saw some of the oldest banks come out and say that they're lacking funding, on top of, Spain just continuing to be pressured. And then you had the soccer game where Greece was chanting back to Germany saying, we're not paying you back. So you mix the little formula there. There's just a lot of things going on ahead of the summit. And right now, I think expectations are coming down because they might talk tough, but they might not put anything set in stone, which has been the major problem over there.
Yeah, we've seen a lot of that. So this is a big week here with the EU summit. What levels are you looking at in the S&P?
I think this morning is very, very important. If you take a quick look at the chart of the SPX, you will see, if you remember last week we talked about this 1360 area. This was the area that was actually the measured move of the depth of the right shoulder of this inverted head and shoulders pattern. You had the left shoulder, you had the head. Here was the right shoulder. We broke above that neckline, gave you a nice move. And we talked about selling into this. We talked on Tuesday. I think I was here with you, Lindsay, on Wednesday saying, take profits. This is a spot to hedge, maybe a spot to get short. And then on Thursday, pow, potent down move, a down move that put all the bulls back on their feet or on their heels because it engulfed this, this entire move. So if you take a closer look here, you will see that we tried to hold the neckline on Friday, but now we're opening right around there today. 132.33 on the spiders to me is very big. I think some guys might try and buy a little bit here, which I'm coming in flat in cash because I didn't like the way this looked here, so I will try there. But if we can't get above this 132.33 real quickly, this is the real line in the sand. If any breach or close below this, and you're going to hear the chorus talking about retest of the lows very loud.
Scott, it's the end of June, and the last couple years have been pretty choppy for the market. So is that what we should be expecting this year as well?
Yeah, the last 3 years we've had about 5 or 6 range trades, which I'll go into in the long form version, where we've went up and down about 7-8%, where you had to take your trades, you had to be tactical, not properly in tier 2 or tier 3, just long, short, quick and nimble, and then typically towards the end of the summer, beginning of the fall, that's when you get some type of sustained move.
On Friday, we saw the stock market bounce. Late Thursday night, Moody's downgraded the banks. It wasn't as bad as many people had expected. So the BKX was up 1.3% on Friday, and some of the other names, received a bounce too. Yeah,
so the banks that have been the trouble spot are starting to lift a little bit. So hopefully most of the bad news is out of the way. JP Morgan actually came out with news saying they covered 70% of their big position. You look at the chart of JP Morgan, you had a nice bounce back. This is when they announced a $4.2 billion loss when they bought the news. Nice bounce back right to resistance. I think it's going to need to spend some time and prove that you could pay higher prices. So holding above 34.90 I think is key. If you look at the XLF, you will see it also came back into some pretty big resistance. We started talking about this resistance. You had 2 areas. You had 1480, and then you also had 1460, and then look at the size of this potent down move right here. But it also, big move off the lows. I would say this line in the sand here for the XLF would be around 14, and then I think some bulls might give it to here. But overall, the banks are just trades. You don't buy them on strength, and hopefully they won't be just sore or hot spots like we've seen in the last month based on JP Morgan and some of those yields.
Right. We got some earnings too. We started to see some earnings from a couple of names like FedEx and Bed Bath & Beyond. But even though they've been reporting disappointing results, most of them, depending on what the stock has done, has determined whether the stock goes up or down on the day of earnings.
Yeah, well, in the next few weeks, we're going to start getting into earnings season. I think it's going to be a very troublesome earnings reporting season. You look at a stock like Bed Bath & Beyond, where it's not priced in, look at that, pow. You're just talking, devastation to the downside. Some stocks actually had some scenarios priced in. FedEx came out, since it didn't do much during the year, it actually went up. So I think you have to be very, very careful with what you're holding going into earnings season, just know your risk, know your time frame, and have some hedges on, because I think we're going to have a lot more disappointments than surprises to the upside.
Well, we're going to get into all of that and more. We're going to look at some of the tech names too, high beta Apple and Facebook in the long form version. So stay tuned for that.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.